Leonard Stern. He's the quiet force behind a jaw-dropping family empire: pets, property, publishing, and philanthropy. This is the story of how a Brooklyn kid from a Jewish household took a modest family business and turned it into a sprawling private empire, how he moved fluidly between commerce and culture, and how he used wealth not only to build skyscrapers and hotels, but to leave a mark on institutions that shape the future of business education. This is Leonard Norman Stern. Born on March 28, 1938, in New York City, Leonard grew up in a family that already had business in its bones. His father, Max Stern, had emigrated from Germany and built a notable presence in America, not only in commerce, but also in philanthropy and Jewish educational life. From an early age, Leonard absorbed two lessons that would steer much of his life. One, the value of steady, generational enterprise, and two, the responsibility that comes with wealth. He studied at New York University, earning his bachelor's degree and later an MBA, training that would prove useful in translating family legacy into a modern, diversified business machine. Leonard's first real test came in the family business, Hartz Mountain Corporation. Originally a pet supply company, Hartz had deep roots in the mid-century American pet market, selling supplies and birds and building a name across households. Leonard joined the business in 1959 and almost immediately began making moves that would change its scale and scope. Where his father had seen a solid regional franchise, Leonard saw opportunity, not just in pet supplies, but in the capital and cash flow those operations generated. He gradually consolidated control, buying out sibling stakes and taking responsibility for expanding Hartz beyond its existing footprint. That expansion looked like a study in opportunism and patience. Leonard used Hartz's reliable earnings to reinvest in something quieter and less glamorous than retail shelves: industrial real estate. Beginning in the late 1960s, he began buying large tracts of land and warehouses, starting with major acquisitions in New Jersey, and over decades he turned those holdings into a massive portfolio. Stern's real estate instincts were simple and precise. Buy where others saw ordinary land or warehouses, hold when the market wobbled, and lease to reliable industrial tenants. By converting a consumer goods company into a vertically diversified enterprise with powerful real estate backing, Leonard created a more resilient balance sheet and enormous optionality for future ventures. But Leonard didn't stop at warehouses. As the decades rolled on, he branched into hospitality, development, and urban projects, the sort of visible, civic-facing investments that transform skylines and neighborhood reputations. He developed boutique hotels and properties in Manhattan and beyond, projects that merged real estate savvy with an appetite for projects that had cultural cash. At the same time, he kept a close hand on the family's consumer goods roots, ensuring the pet side of the business funded new bets without putting the whole enterprise at risk. There was also a media chapter to his story. In the 1980s, Leonard moved into publishing, perhaps an odd fit for a man of hard assets, but entirely consistent with his quietly acquisitive style. His company acquired alternative weekly newspapers, most famously The Village Voice, assembling them under Stern Publishing. The move into media showed Leonard's appreciation for influence as well as income. Owning a platform meant shaping conversations and connecting to civic life in New York City. He didn't turn the newspapers into flashy profit machines. Instead, he treated them as holdings that fit a broader portfolio and reflected an interest in culture, ideas, and community. As the 1990s turned to the 2000s, Stern took another pivotal step: streamlining and monetizing. The family sold off parts of the pet supply and publishing operations around 2000, a decision that crystallized the firm's move away from consumer retail and more toward long-term real estate and diversified holdings. The sale generated substantial capital, which Leonard redeployed into development, philanthropy, and a quieter kind of influence: board seats, trusteeships, and large gifts that would anchor his name on institutions he cared about. One of Leonard Stern's most visible legacies is in education. A major benefactor of his alma mater, he gave the kind of transformative gifts that not only fund programs, but also rename institutions. The business school at New York University bears his name, the Leonard N. Stern School of Business. That naming reflects decades of giving and engagement, at times functioning as a strategic partnership between donor and university, funding scholarships, leadership programs, and initiatives aimed at increasing access and opportunity for students from underrepresented backgrounds. Leonard's philanthropy here is classic. It amplifies institutional capacity and ties his family name to the cultivation of future business leaders. Philanthropy for Stern extends beyond business schools. Over the years, he and his wife Allison have supported wildlife conservation, museums, scholarships, and civic institutions. These gifts reveal a private man who prefers serious, structured giving that funds long-term programs rather than flashy PR moments. They also reveal a pattern. Leonard gives where he sees institutions that can scale impact, where his money buys longevity and capacity. Of course, no great fortune grows without complications. Stern's story weaves in family dynamics, legal tangles, and public controversies. Members of the next generation, his sons and daughter, have taken on visible roles in aspects of the family business, with mixed results. Some deals succeeded, others floundered. A few headline moments, legal disputes or regulatory investigations touching family-run funds, drew uncomfortable attention. Yet, Leonard's central role as a steady, controlling figure kept the broader enterprise intact. His approach has often been to let family members learn in the arena of business while he held the macro reins: the portfolio, the long view, the seat at the table. It's instructive to look at Leonard's style as a businessman. He's not showy, he doesn't court the limelight. Instead, he's what you might call a structural investor. He identifies durable, fundamental values, land, long-term leases, institutional partnerships, and then assembles them into resilient systems. Where many modern magnates chase trends, Stern built a fortress out of basics: property, recurring revenue streams, and the kind of controllable assets that survive economic storms. That conservatism doesn't mean he avoided risk. In the 1990s and 2000s, he took bold steps into redevelopment and hospitality, arenas that carry higher public profile and more immediate volatility than warehouse leases. Those moves gave the Stern family name a visible public face. Hotels, urban redevelopment projects, and investments that touched neighborhoods and checkpoints of public taste. But even in those ventures, Leonard's fingerprints were clear: strategic patience, careful placement, and a willingness to pivot when public sentiment, demographics, or market structures shifted. Another distinct chapter in his life is Leonard's relationship to art and cultural artifacts. In recent years, his interests and deals attracted scrutiny, especially deals that intersected with national heritage and complex cultural politics. These moments show that private collectors and deep-pocketed buyers can quickly become actors on the global cultural stage. When a billionaire makes offers that touch national heritage, governments, museums, and critics all weigh in. Stern's forays into high-profile acquisitions underscored something important. At the intersection of private capital and public culture, decisions are rarely purely transactional. Leonard's personal life also shaped the arc of his public persona. He's been married more than once. Allison Stern, his later wife, is a prominent partner in his philanthropic and cultural endeavors. The couple has supported conservation, the arts, and educational initiatives. Family relationships, the alliances and rifts that come with multi-generational wealth, have threaded through the story of Hartz and the Hartz Group. Those family dynamics are human and universal. Alliances shift, next-generation ambitions collide with legacy structures, and the controlling patriarch has to reconcile stewardship with succession. When journalists and chroniclers profile Stern, they often return to an essential paradox. He's both fiercely private and institutionally visible. He rarely seeks tabloids, yet his name is stamped across a major business school and major real estate projects. He prefers transactions and boardrooms to red carpets, but his decisions reverberate in cultural institutions and city streets. That duality, private humility, public consequence, defines much of his public legacy. And then there's the wealth itself. Across decades, Stern quietly amassed a fortune that put him in the billionaire ranks. His net worth has fluctuated with markets and private valuations, but his place among America's richest has been well documented. Yet Leonard's wealth has never been purely about accumulation. It's also been a tool for philanthropy, for civic influence, for intergenerational stability. He used capital to endow institutions, underwrite education, and preserve family control over strategic assets. How should we remember Leonard Stern? As a builder of quiet empires, as a steward who transformed a family pet business into a diversified trustee of land and institutions, as a donor who believes that money should empower institutions that produce long-term value, as a man who understood that sometimes the most powerful moves in business are not the loudest ones. They're the purchases, the hold periods, the incremental consolidations that compound into immense influence. He reshaped neighborhoods by developing hotels and buildings. He reshaped education by endowing programs and scholarships. He reshaped media markets by buying and later selling influential weeklies. There's a lesson in Stern's trajectory for anyone building something meant to last. First, control the sources of cash flow. For Leonard, the pet business generated the capital that funded land purchases and developments. Second, diversify into assets that appreciate differently. Stern balanced consumer markets with industrial real estate, hospitality, and selective media ownership. Third, invest in institutions that multiply influence. Naming a school or endowing a program buys reputation and shapes future leaders in a way that pure market deals rarely do. Fourth, reserve the right to pivot, sell what no longer aligns with long-term strategy, and redeploy capital to where it can compound. In the end, Leonard Stern's biography reads like a manual for patient empire building. He didn't manufacture headline-grabbing tech startups or chase viral fame. He built by accrual. 1 acre, 1 warehouse, 1 calculated purchase at a time. He held when others panicked, consolidated when others fragmented, and gave when institutions needed enduring support. His net worth and business reach are the visible metrics of that approach. The more profound legacy is institutional. The school that bears his name, the scholarships that bear his imprimatur, the developments that altered city blocks. Leonard's life also reminds us that wealth and responsibility are entwined. With control comes scrutiny, from family disputes to legal tangles, from public debates about cultural acquisitions to conversations about the proper stewardship of urban development. Stern navigated those storms with the same steady hand he used to navigate deals. Not flashy, not theatrical, but deliberate. If there's a final image that captures Leonard Stern, it's not a gold watch or a marquee skyscraper. It's a ledger with balanced columns. Revenue streams on one side, land and long leases on the other. A list of endowed programs, trusteeships, and board meetings. Quiet decisions that produce visible results over generations. That ledger, the careful accounting of risk, patience, philanthropy, and family stewardship, is the real monument to his career. Leonard Stern's name will live on in institutions and city streets. But beyond plaques and headlines, his quieter imprint is in the generations he helped fund and educate, in the neighborhoods reshaped by his developments, and in the way a modest family business can, under patient leadership, become an engine of civic and cultural life. That is the paradox and the power of Leonard Stern's story. An unflashy empire with deep, lasting reach.